Hey, welcome back to the channel. Hope you guys are doing well. This is a three-part video series. We did finish the the underrated growth stocks video, and now we are doing the underrated income. No, yep, underrated income video. What makes an income stock underrated? First of all, we need to go to, we needed a stock that pays a dividend. So dividend yield, we want custom. Let's do between 1% and 7%. Oh, and 7%. All right. We want a dividend that has EPS growth over the past 5 years to be positive. We want a company that's been doing well. We also want, let's see, we want the target price to be above the price. All right. We want a PE that is under 20. All right. Let's see. I'm trying to, we want to keep the debt because there could be some real estate companies, brokerage companies that do handle a lot of debt, but they also pay dividend yields. So we want gross margins to be obviously positive. Let's do over 10%. Wow, that took over 100 out. We also want stocks that, let's see, growth past 5 years, EPS growth the next 5 years. That's hard to pay out. Let's see. Country, we'll do USA. Okay, so let's do the exchange. We want it to be, oops, the market cap. We want it to be over $2 billion, over a $2 billion company. All right, we want, let's see, EPS growth next year, obviously to be positive. Wow, that took out quite a bit. Oh, I'm sorry, that was this year. Next year, we want that to be positive as well. All right, we're down to 47 companies. Let's see. We want the company to be profitable, obviously. So profit positive. All right. So we now have 47 stocks. I really think now it comes down to you as a person to look at your risk reward ratio. What we can do, let's look for dividend yields of, let's say, 3 to 7%. Okay, that brings us to 25 stocks. We're obviously not going to look at 25. Let's just look at the highest market cap company. We'll look at the lowest and the highest. Energizer Holdings, we'll look at that one. We'll look at these first two, MDU and NJR. And then we'll look at the highest market cap, which is going to be Philip Morris, Target, and American Electric Power. All right, so starting off with the lowest market cap, which was Energizer. This one is in a clear downtrend. I think we want to stay away from this one, honestly. Their debt looks disgusting. Let's go here. They have 4.5 billion in assets, 4.2 billion in liabilities. That is dangerously disgusting. We cannot. I cannot. Yeah, and nobody's buying. I would think institutions own 88%. ENR, I'm going to say less. 106%. Wow, they actually own more. You can see the bump up right here. That is some pretty gnarly debt. So this company pays 3.89% dividend. However, it's just been going down for as long as you can see. The stock is now the same price it was back in 2015. So we're not even going to entertain this one. We're going to pass. All right, MDU Resources Group. This one looks fairly stable. So the thing about stable income stocks is that you want it to be stable and you also want to collect a premium. So every month you're getting a percentage of a dividend. So for this stock, you're getting a 3.76% dividend. This looks beautiful. This looks concerning. You can see that it had 2 big jumps up to 1.95 EPS, and it's kind of slowly been going down. Maybe it's taken 2 steps back to take 3 steps forward. I'll leave that level of research up to you. Looking at this chart, I mean, going all the way back, this actually looks great. Let's just look at the yearly momentum here. This was, I'm sorry, I forget the stock name. MDU. And it looks like I've cataloged this one before, which is great. So, wow, look at the precision. Wait, is that right? Was there a huge gap down? Did I miss something? Oh, they might have done a split. Did they do a split? So the stock was 28 and then it went down to 19. And that was recently? 2021 was 34.96. 2021 was 24. So something's a little askew here. I don't know if, I don't know what. This was $10. This went down to, that is strange. I don't know what's off here. But 1980 is the stock price. Yeah, so it's the same stock price. I don't know what's going on with Thinkorswim. I'm inclined to think it might be Thinkorswim just because Schwab took it over and I don't know what this is all about. And I don't know where these highs are coming from. Let me just Google if there was a split on here. No split. Share. Declares distribution of shares of Knife River. So that could be part of it. I really don't know for sure. Again, I'll leave this up to you to do some of the research. But I mean, if I was a guessing person, like this is the same price it's been at since 2006. Has the company improved since 2006? I'm going to say yes. So institutions own 70%. That's old data. New data says 80%. So a 10% increase. That's pretty nice. You can see a slow upward trajectory, which is awesome. So I like this one personally. If I had to park money here for 10 years and let it just make 3% every year, that'd be okay. But also at the same time, the share price appreciation, you're not going to see much. You're only going to get that dividend. So in terms of safety, this is a pretty safe stock in my opinion. But in terms of share price appreciation, you're not really going to have it. So yeah, I don't know if I would consider this one a stock to put in to if I was retired, just because the shares are not really going to appreciate, but I will have that dividend. So decent stock, not the worst, but we'll just have it on the back burner for now. This looks like New Jersey Resources Corporation. So say what you want about utility companies, but they are rather micro, if that makes sense. If the state of New Jersey goes through something that affects the regulated gas market, be it an earthquake, a storm, a hurricane, winter event, whatever, it could severely affect the stock. Kind of think about the Maui fires, and how that affected the stock. So this looks dangerous. Their quick ratio is 0.38. I'm just want to go and look at their cash really quick. They have $950,000 in cash. Total liabilities 6.5 billion. Total assets 6.5 billion. Total liabilities 4.5 billion. That's very dangerous. Total debt is 3.1 billion, and they only bring in 1.9 billion a year. They're slowly addressing their debt, and you can see that by their current debt is 1.65, long-term debt's 1.46. They're profitable. I would be worried about just this. You're investing essentially in the state of New Jersey. Unless you live there and have a really good grasp on the New Jersey gas market, I don't know if this is something I could really entertain, honestly, unfortunately. So let's move on. Philip Morris, this is tobacco. Ooh, look at this pattern here. This is what you call a pennant, and I can just see right here like that, and we got this going like this, and you can see there's a little bit more room to the downside here. Or if you really wanted to like capture, you could go right there. Philip Morris, this is a tobacco company. Tobacco is not good for people, is what the mainstream media is all about. I can't really factually, I think tobacco is not good for you, but I don't have anything to back it up. I know cigarettes cause cancer. They put those nasty pictures on cigarette boxes. It looks like this stock is actually ready to explode up. We can see the RSI is strong. We can see the MACD momentum is also flipping upwards. The money flow is actually heading into strong territory, and the relative momentum is actually heading down. So this is a 5.46% dividend. $108 stock trading at $94. You cannot argue with this. You can also not argue with this. Yeah, this is good. It's been in it's been in like trading sideways for, gosh, let's see. Let's go here. And we'll go. It's been trading in the same range for about 10 plus years. So could be left shoulder, head, right shoulder building up here. I don't know. It's also got a 5% dividend. That's really good. Look at all these huge price targets. So I would consider this a decent value stock. A lot of insider selling here. But man, this profit is just through the roof. It's been kind of flat actually for the past couple of 2-3 years. Yeah. Cash, they're also getting low on cash historically. Total assets 61.6 billion. Total liabilities 70 billion. Actually, that is not healthy. That is bankrupt, isn't it? When you have more liabilities than assets, you're screwed. Total debt is $43 billion. They make 34 billion. They're profitable. They're pretty profitable. Damn, what are they doing? Are they even decreasing their debt? Total debt, oh no, it exploded. Oh my gosh. So be on the lookout for that. I would let this play out over the next few months. I don't think it's worth it to see it test 100. I want to see it come back down to 80s, honestly. This is pretty ugly in terms of debt. So we're going to rule out Philip Morris. Looking at Target, quick ratio is 0.18. I am nervous for this company, Target. Balance sheet, total assets 53 billion, total liabilities 42 billion, close. Total debt is 16 billion. Cash, they have 2 billion. Man, they're fighting. They're fighting to stay alive. A lot of insider selling. You can't lie. I mean, that doesn't lie. This is kind of scary. This is a big box retailer company, so just keep that in mind. Momentum's heading upwards. Money flow is actually kind of trending down. Relative momentum looks like it's actually kickstarting back up off this low. So target momentum could be good. Let's go ahead and calculate this price for Target, because historically it's been a good buy historically if you've owned it since 1990s, and then the huge blow off top in 2021, and maybe this long-term bottom. So let's run some numbers here. They have 65 billion, 750 million in market cap. Okay. Income of 3 billion, 630 million, right? Yep. Okay, they have 106 billion, 890 million in sales. 106 billion, yeah, that's a lot. 3% dividend, not bad. Okay, the total cash is 2 billion, 229 million. Total debt is gonna be 16 billion, 139 million. All right, divided by 460 million, 500,000. $352 stock price, trading at 142. Also considering they're giving some of their money away to the shareholders in forms of a dividend. I don't have that baked into my calculations, but based off of that, this is undervalued. The highest analyst price is $160. Let's see what institutions are doing. Old data says institutions own 79%. New data says 92%. That's a big jump. Yeah, and you can see it actually increasing right here. It's heading up, kind of hitting a wave, and maybe going back up. Let's just see. Capital World Investors, holy cow. Vanguard increased a little bit. BlackRock decreased by 5 million. State Street decreased by 3 million. So I kind of like this one. Yeah, I like this one. Let's just look at the yearly momentum really quick. TGT. Wow, it bounced off of the long-term support. I have this going all the way back to the beginning of time. That's crazy. So double bottom off that. I think I would have to take, oh, man. But also you see this pattern right here. Spike up, down, up. Now it's came down here, tested it, spiked up. What are the odds it comes back down? I don't know. Let's look at the MACD here. Let's see if I have a light. Slim, where's Slim? Okay, buy and sell zones. This is pretty cool. It told me to buy at 125, sell at 244. Wow, look at this momentum down here. That's huge. Yeah, I like this one, unfortunately. I don't want to like it. Wow. Yearly momentum is kind of low, but I mean, look at this. That's crazy. And is Target guiding for positive EPS next year? 8%? That's kind of in line, honestly. because past 5 years has been 2%. Sales past 5 years 8.6. So it's kind of in line, but also, yeah, it's, I don't know. If I were to get into this one, which I don't know if I will, I would take slow bites. So, for example, if I had $1,000 or $100, whatever, maybe do 5 or 10% a week. So $10 one week, $10 one week, $10 one week, etc. So I like Target. We'll keep it up. And this is American Electric Power Company. I don't know for what state. It's honestly, it looks like it's kind of hit a snag. Let's see. You guys can kind of see the chart right here. It's kind of curled up and down. You can see momentum's actually heading up. Money flow is heading up. Relative momentum is swinging around, and the strength is actually getting right here. The strength kind of curling up as well. So where is this located? Columbus, Ohio. Okay, let's just look at the balance sheet. Total assets 93 billion, total liabilities 69 billion. It's a lot. Total debts 40 billion. They make 19 billion. That for a 4% dividend. And again, this doesn't lie. This is amazing. This is also amazing as well. Shares outstanding is going up. It looks like a form of dilution down here, actually, so be aware of that. Let's take a peek here. This was AEP. Yeah, AEP. It's actually looking good. My signal said to buy it. That's funny. Monthly. The monthly is at a sell. It's not at a buy yet. But look at this. This is getting ready for a turnover. Look at that. Wow. Look at this too. That's awesome. So I would keep this company in on close watch. We can give it a couple months to see how it interacts with this purple line here, which is going to be the 9 SMA on the monthly. So you can see the stock has a really hard time staying above it. It actually has not stayed above it in a while. So essentially my buy and sell targets are once the stock gets above this line, it's a buy, and we can see it has not. So we can actually see down here, it's actually reversing. So if you're more risk averse and you want a 4% dividend and you think this is a good value, go for it. But myself, oops, I'm not sure if I would do that yet. But not bad, honestly, in my opinion. Let's look at the weekly chart to see what it looks like. Yeah, weekly chart looks like it's consolidating well. So you guys make the decision. It's in Ohio too, so very focused market. So we looked at a few stocks. I actually have 3 up here that I kind of like: MDU, Target, and AEP. Underrated, yes. I think we're gonna have to keep these in line with OPRA, UTHR. Those were the underrated growth stocks. So I'll just track that, and we'll check in maybe 6 to 8 months. So next we're gonna check in. We're gonna look at value stocks. That's the next video coming out in a couple days. That one is going to be essentially looking at companies that have a low price to earnings. Analyst price targets are high, current stock is low. See if we can find the gap, and if there's any opportunity within those gaps, see if we can make a move. If you guys made it this far, consider hitting subscribe, consider hitting like. Take care.